welcome back to the next in our series of team videos. And today we have with us Matt Ripley. So Matt, why don't you introduce yourself and tell us a little bit about your business?
Yeah, thank you, Andrew. I'm Matt Ripley with Cross Country Mortgage. I am a mortgage loan advisor here in the Twin City marketplace. I originate home loans for my clients to purchase new primary residence, second homes, and investment properties, not only here in Minnesota, but in all the states in the U.S. I also do a lot of refinancing, debt consolidation, permanent construction loans. I mean, we have a very big portfolio of loan products. I office here in Edina with Cross Country Mortgages, a national lender, focusing on those items I just discussed.
Great. So Matt, how'd you get started in your field?
Great question. The truth of the story is I ran a car dealership right out of college. I didn't really know what I wanted to do for a living. Everybody always thought they always said I'd be good at sales. But the one thing I noticed about young college graduates that were graduating before me, that were older, that were my friends, is they would just take a job and quit, and they just weren't establishing any credibility or commitment. And so knowing that I may have a future in sales, my friend owned a car dealership, and I started out selling cars and was immediately successful in that industry for about 6 or 7 years. But while I was in that industry, my brother-in-law was in the mortgage business, and I watched him build a scalable business model in the mortgage industry. And I really wanted to get started in an industry that allowed for me to build, foster those relationships I have with individuals in my sphere of influence and community, and then kind of become their go-to person when it comes to their home loan needs. I was always interested in that, and I was more or less recruited by somebody that I was doing business with that thought I would be good at mortgages, and that's kind of the key word. Someone reached out to me regarding mortgages and been kind of on my top of mind. So I sat down and talked to them, and I was at a transition phase in my life in my late 20s, and I took a leap of faith, got into the mortgage business as a mortgage broker. I got a professional coach with Money Tree Training Group and built an active sales force of referral partners and sphere of influence back in 2007. And here we are, 14 years later, been lending successfully around the country.
Great. So if someone asked me, what do you do? Like, what's the best answer I could give them?
Yeah, that's a great question. What I do is I educate my clients and advise them on how they can quickly and successfully build wealth through real estate.
Okay. So what's a common myth about your job or the mortgage field that you commonly run into?
I don't know if I'd say common myth, but I would say I've heard this comment many times over the years. Hey, how can you do that? Don't you work? Or, man, you have a lot of time on your hands. And the reality of it is I'm self-employed. When activity is really busy, you have no time. I mean, in the last 2 or 3 years, it was not uncommon for me to get up at 6 a.m., walk over to my desk, and go to bed at 1 or 2 the next day, just working on transactions in a really low interest rate environment. I worked more and harder than anybody I know that wasn't in the mortgage industry. So that common misconception that mortgage people don't work hard is actually the exact opposite. We have to work very hard. There's just times throughout the course of the day that you can manage your scheduling to fit in some of the personal items on top of what your professional needs and clients' needs are.
Okay, and I think one common thing that I always run into in the mortgage industry is people see the published rate what the rate is they hear in the news, and they assume that that's the only rate they can get. Is that really the way it works, or can you qualify for a different rate, or higher or lower? Like what do we do when we see that rate in the news for mortgages?
Yeah, great question. So everybody qualifies differently for an interest rate. I like to call it the 3 C's of qualification. That's credit, collateral, and capacity. Okay. And when you see advertisements online or in the news, I always reference it to like a used car ad. It looks great. It looks great on paper, looks great on TV, but when you actually show up, that car is purple, has no power steering, no windows or locks, no radio, you'd never buy it. But let me upsell you into what you would buy. It's just a marketing tactic to get people to call in. Once you do call in, or once you do discuss with a mortgage professional like myself, I'm going to educate you on not only what the interest rates are, but what is the cost associated with each interest rate. And that's the big thing, is the education piece. Any interest rates available, what does it cost you based on how you qualify? How do you fall into those 3 C's? Credit, collateral, and capacity. Those are called loan level pricing adjustments. And all home loans, everybody falls into the loan level pricing adjustments. What is your credit? The higher the credit, the less the loan level pricing adjustments that are in place. How much are you putting down for a down payment? Or how much equity you have if you're doing a refinance. How you fall into that equity or down payment bucket will determine your loan level pricing adjustments. And then finally, what are you doing? Are you doing a purchase? Are you doing a cash out refinance or just a basic refinance? What type of property is it? Investment property, second home, primary residence? Is it a condominium, a townhouse, or a single family residence? So how you fall into every one of those categories determines your loan level pricing adjustments, which then determines what the par rate is for how you qualify, which is different than how I qualify, how you qualify, because we all have different scenarios. At that point, I can share with the client, all right, here's what the par rate is based on what your qualifications are. You can buy down the interest rate if you'd like to go below what par is, and here's the cost associated with that and what the break even is on that. Here is a rate above par, and we can take the margin above par and pay it towards closing costs or other items associated with the home loan. So really educating the clients for them to understand not only, what is the rate, but how do I qualify? It doesn't make sense to have a higher rate, a par rate, or a lower rate based on what my specific goals and interests are, short-term and long-term.
Okay, great. So you got started in the car dealership business. Now you've moved into the mortgage business. What's one thing that you didn't expect as you moved into the mortgage business?
So that was, about 14 years ago. I remember when I first started in the industry, mortgages were not very regulated. It was kind of wild, wild west. And then, the market crash happened in 07, 08. And a lot of different acts became, the government came up with a lot of different acts. Dodd-Frank came up with many different regulations, and people that were doing home loans that looked at it as a easy way to make money got out of the industry. And those that wanted to create a business and help consumers, homeowners, friends, family, sphere of influence, really understand what the benefit is of being a homeowner. That was really what's been something that has become very evident to me, that those that really take the time to build their business can create a long-lasting career versus someone who's just chasing transactions. The other thing is low rates. I remember when I started in the business and I did 4.25 interest rate for somebody. I don't remember the exact name, but I remember the first time I did a 4.25 interest rate. I started in the industry 07, 08, and rates were in the high fives, low sixes, mid sixes, and then, which is, similar to the markets we're in now. And they went down to 4.25. I remember doing an interest rate and I said, I'll never do another one like this again. Well, the reality of it was, I kind of was doing home loans in that range for another decade until the last few years when it's just been really low rates in the low twos. So the swing in the marketplace, where just like the stock market, you know, you have market readjustments. I don't think we'll see that again as far as like home values crashing, just because of the regulations that are in place to protect consumers from getting themselves into a loan product that's going to damage them, as well as simple supply and demand economics. There just isn't enough supply of homes to inflate the amount of homes on the market. Regardless of what the buyers are, the supply is so low that will continue to keep the value of homes going like this. So the low rates and the continuous advancement of home values, you know, that's one thing. Just not having been educated on it when I first started in the industry. Just seeing some of those different adjustments in the marketplace was what I didn't expect when I got into it, but what now is very, very, very comfortable with the market we're in right now. You know, it was time for things to level off, because, you know, it just was too inflated with these low rates, which isn't sustainable for a successful economy and a successful housing environment.
Okay. So if somebody wanted to get started in the mortgage field, what advice would you give them?
Yeah, another great question. I think the biggest thing, in my opinion, is this is not an industry, although it is an industry that is results oriented and transaction oriented. I believe that it's more important to establish relationships and build on those relationships, those referral partnerships, that sphere of influence, making sure those in your community know what you do. I think people do business with those they like and trust, and really building and fostering those relationships will naturally create transactions. So if you focus more on the relationship building portion of your business, I believe that transactions will naturally happen. You know, we all look at, I think a lot of people look at their business model and they know what they want. You know, I want to make money, I want to do transactions, but how do you do that? Well, you do that by creating long-lasting relationships that you can foster and continue to do the right thing and the good thing for your clients, friends, family, referral partners, and naturally in doing that over time, transactions are a product of that activity.
Right. And that's a perfect segue into, we learned a bit about you as a business. Let's learn a little bit more about you so we can know, like, and trust you. So if you had to write a book tomorrow, what would you write about?
If I had to write a book tomorrow, I believe I'd write about success. And there's such a misnomenclature with what success is and how it defines people. You know, to me, success isn't that necessarily, you know, how much money have you made? What are your acclimates? You know, for me, success is how many people have I helped? How good of a father am I? How good of a coach am I? A teacher, a sibling? You know, am I constantly searching for more information on how to be a better person? You know, these are the things that really drive me towards what I feel is a successful life, is that constant journey for just being a better person, having a great mindset, being a great father, being a great coach, good colleague, good at my job. You know, I just think there's such a you know, for me, my definition of success is, I think, different than a lot of people's. I think you naturally are going to have success if you focus on some of those other auxiliary items versus just, you know, doing transactions and making money and doing home loans.
Okay. And this probably grows out of your book, but if you could be remembered for one thing, what would it be?
Right. Well, I can't say one thing, but I will say two things. I really want to be remembered for being a great husband and a good father. I'm only as good as those I surround myself with, and I'm very thankful to be surrounded by a great family, great wife, 2 great children, and those are the most important thing to me in my life. And so, I'd love to be remembered as a great husband and a great father.
All right. And you talked about, when times are busy, you could start at 6 a.m. and go to 1 at night. So what's your best or your favorite productivity hack to help you take all those hours and be productive?
Sure. And again, it's important to understand that, you got to plant your flag where you're at today, plant your flag at where you want to be. But what you got to do in between there to make sure that those goals are met, and that's activity. Activity and relationships create results, okay? And so my productivity hack is I follow what's called a greatness tracker that allows me to track my daily activities during the business week and then during the weekend. And I try to stay very true to what that tracking is, with face-to-face meetings, with productive phone calls with leads, referral partners, great clients, with thank you cards, with prospecting, and then how many deals, how many leads come out of that activity each week, and I can watch that throughout the course of the week, throughout a month, throughout a year, and naturally activity and doing the same activity the right way every day should create results.
Right. So what book are you currently reading?
Currently, I'm reading a book that you happen to have right there on your bookshelf, Deep Work.
Mm-hmm.
I think that's a great book. I think it's easy for individuals to get distracted in what they're doing daily. And I just love the premises of that book on deep work, and that 1-2 hours of really deep work could be very more productive than someone who's just in an office 8 hours a day that are getting distracted every which direction. I love the direction of that book, Deep Work.
Great. All right. Well, Matt, it's been really interesting learning about you and your business. Why don't you tell people what's the best way to connect with you?
Yeah. Email matt.ripley@ccm.com or my website, themattripleyteam.com. That's MATTRIPLEY.com, or on Instagram, mortgages_by_Matt.
All right, great. Thanks for your time today, Matt.
Yeah, thank you, Andrew. I appreciate it.